Good morning, world. Doc here from North America. Good morning, good afternoon, and good evening. And what have I been just rambling about? We've been talking about, what's it called? Evergrande, right? The #1 bank in China. You know, it's a property bank. It's gotten crushed. It's now down to bankruptcy prices. It's basically done and over with. The U.S. media, I don't really know if anybody's really carrying it, so I haven't seen any particular concern or discussion or, you know, any of that stuff at this point. So, you know, out of sight, out of mind. That's the way they work over here nowadays with the news media. We don't really have much. We have one group controlling almost all the news media. So if they don't want to talk about it, they don't talk about it. But it doesn't really matter. The markets are dropping from it either way. We'll see. The bigger question is what kind of fallout we have from, you know, who owns their bonds and who owns some of their stock, and, you know, do they have swaps with them, and, you know, all the magical things that have driven, you know, Citibank and, you know, Deutsche Bank and all these other banks down to bankruptcy prices throughout the decades, and our central banks and their central banks hold them up. But when it comes to the People's Bank of China, they basically said no. They said, no, we're not holding it up. Let's tune in and see if anybody's on the chat line. Nothing so far. There goes the fact check spreadsheet up there. All right. Well, since nobody's on there, I think I'll take a sip of my tea since it's the morning time here. There we go. Now, you can see here we have the Swiss up there. We start off looking at the Swiss pairs trade. And the Swiss has been moving up, and we have been suggesting for days now. I mean, we already know, looking at it on a weekly basis. Is that it right there? No. It is right there. There we go. Knowing on a weekly basis, we've been in a weekly buy for, you know, 3 full weeks now it is. 3 full weeks. And a weekly buy going on a 4th. It's been climbing up, like our math usually says it, 8.5 out of 10 times. And notice it got to the top end of that range this time, busted that channel that we had seen, and maybe they don't care about inflation at this point. In other words, they just want to get their money back. You know, even if they get 70 cents on the dollar, they would be happy to get their money back. I think that's what it really comes down to at this point. And that's probably where we are, and we're going to learn more about it over the next couple of days, because sooner or later, all the news will be out. You know, when some of our major banks here in the States can't, you know, can't get their money back, maybe someone will report it in the U.S. media, and I'm sure you're seeing it somewhere in Europe at this point. Who knows what Europe? I mean, there are so many China lovers in the financial industry, and they don't really care about the slave labor, or they don't care about the fake data. They just want to be invested in China. And I always say, well, if you really love China, then you want to marry the Commonwealth, because the Commonwealth has twice the amount of people, has a higher income bracket, and the only reason you're in China is because it has 1 billion people and the Commonwealth has 2 billion. So why not get involved in that? Yes, indeed. So you can see there the Swiss is moving up, which well, actually this morning when you really look at it, the Swiss is moving down now. The spike, you see that right there. It's a down candle, so it's pushing down. And so Friday they drove it up right there, and today they're pushing it down. And here it is right there. The hinkies are still green, just like our dots are green. The white line is above, heading towards the highest part of its range. Oop. And you can see here, Chicago Quant is starting to roll over here. We're getting some weakness with that weakness there. So, just a flavor of it all. As I take another sip of my cup of tea. That's good. Makes my throat feel good as I talk. All right, and so that is the way the dollar is going at the moment. I mean, and I don't know if I mentioned it on Friday. I might have I think I had, that the People's Bank of China bought like another $15 billion worth of U.S. bonds. So they know that they want to put it where they can get it back. I was talking with somebody this morning, and I said, you know, I said something about what's going on with Evergrande, and at the same time, I said, you know, talked about the idea of, you know, options and binaries and how they protect you and, you know, what they do. And then I said, you know, and they said, well, isn't the world paying minus anyway? And I said, no. This means that they don't get back they're paying minus. This is what I said. They're paying minus to own bonds because they know that they're going to get their equity back. In this Grande situation in China, their money's gone. Because the Bank of China and the political party have already said, no thank you. That's their problem, not ours. Douglas, good morning to you. I'll have a sip of tea when I say good morning. Yeah, good morning to you. Grande again on the front page in the world, you know, in my world. I don't know if the U.S. media is covering it yet. They hate covering anything that says anything bad about China. So, when given a chance, they'll just skip by it. Wherever you are, I hope you're seeing it. Another 2008 scenario, Doc? 2008 hasn't stopped. It's just, I guess, yes, it would be a 2008 characteristic. I think you have to call it a characteristic or another, there's a word I can hear. It's another 2008 event. That's all it is, because we're still in the 2008. It hasn't gone away. Until quantitative easing ends, as I was hoping you were going to show up. Top of the morning to you, too. Until quantitative easing ends, 2008 goes on. It marches along. It doesn't stop. It's here. And that's how that all plays out. So it's another characteristic or another event of 2008. Yeah, it's part of the 2008. It's all part of the 2008 scenario. In other words, what they did is they floated bonds for, you know. Let me digress. What it really comes down to is keeping interest rates too low versus the risk that you're investing in instigates this mess. And then the QE hides it more and more and more, and they go out and they buy. In other words, the quantitative easing is buying, well, the United States are buying 160 billion a month of new investments, and they're rolling the old ones. That's not counted as new. They just keep on pretending that means nothing. So, you know, if they're invested in 5 trillion right now in different portfolios of Santander and Citi and Deutsche Bank and Lloyd's of London and Bank of Scotland and HSBC, I could keep on going. Merrill Lynch, they probably own Merrill Lynch bonds still. You know, so what happens in the end result is that poor decision making of investing is a manifestation of our times. And so this is an event of the manifestation of our times of living in 2008, like a Groundhog Day, every year. It's over and over again. Bad investments being propped up by central banks. And so money runs towards the highest yielding, but not the best investment tool. How does that make sense? Does everybody, or does Doc sound too crazy than normal? But that's pretty much what it all comes down to. So in other words, we're in the 2008 scenario still. It hasn't gone away. And until quantitative easing goes away, 2008 doesn't go away. So it hasn't had a chance to, like, you know, reshape itself. Does that make sense, Douglas? But yes, it is a 2008 scenario component. It's just one more shoe in the closet of 2008. I hope that makes sense. Give me a hallelujah. Hallelujah. There you go. All right. So that's where we are right now. You know, and you can see here we thought all this strength in the, as you see on J4X here, all this strength I thought was the Evergrande, which has been going on for like 3 weeks now. I thought that was that strength in the Swiss. Oh, good. What you've just confirmed, Douglas, is that I am not thinking I'm crazy. When someone chimes in and says, yeah, that makes sense. It's like, cool. So I've seen this weakness, and I thought the stock market weakness, we saw the just a simplistic view of that. Let's just throw it down there real quick. Where's it at? Right there. Right there. So right there, and I'm just going to throw a picture up there for you of the chart of the Dow Jones Industrial Average. Went into a weekly sell-up in here at the beginning of the Evergrande situation, and it's just driving equity down in price solely because they need capital. So what they'll do is they'll sell out what they can, here and there to get cash. And notice that they're parking it in China, they're parking it in the U.S. Treasury bonds, which is a flight to safety. So it's always funny when they say things like, oh, we're not going to buy any more of that junk or whatever, It's like, but the moment there's a scare, what do? They run towards it. And unfortunately, and I know, yes, that sounds strange. I say, unfortunately, our currency goes up in value too, which we're not happy about all the way. Some are, I guess, the socialists love it. They love our dollar to be so high and expensive so that they can raise more values, raise more taxes and so forth. But it's not the best thing. Let's see, genius always looks crazy to the average. Oz, what a compliment. Thank you. What a compliment. Thank you. Yeah. So, we are here looking at these markets, and we've seen the pairs trades weaken and then become strong, and we've noticed over the last couple of weeks, remember we noticed the euro was showing a lot more strength than the Swiss, and I thought that was kind of odd. And the moment that started, that's a warning light in my head. Because I think the two places that money runs to hide is the Swiss and the dollar. That's why I like looking at the Swiss against the dollar, as I sip some of my tea here. Against that, it helps us understand what the dollar is doing more, by watching the way the Swiss is acting with the dollar. And if the dollar is gaining this much strength on the Swiss, then that things are getting bad. Not as if they were any good to begin with. And that is really the issue that we're dealing with right now. So let's go take a look at the euro and see what that's looking like. Ooh, and I gotta say it again. Thank you, Oz, through the word that says, I'm cool. I could be cool. I am cool. Genius looks crazy. Yes, it does. You can see there's the euro. It's moving down. It did slide into the let me go back up to that. The euro did slide into the weekly sell last week. Where's that at? That was to me, that even said even more. The fact that the Swiss was moving up against the dollar, but now the euro, which had showed some life into it, went and closed in a weekly sell last week. I'll have to put the line in there. Straighten that out. There we are. But notice it is flirting. It's doing that flirting thing. Someone move this over. It's flirting with it, right? Yeah. Look at that. It's flirting with the weekly buy again. So, look, I think that money just runs to what they think is safety, and then what happens is that when the scare is over with, and again, if everybody would just use binaries and options instead of some of the risk that they take nowadays, the money wouldn't run like that. And I did mention, when I had my hedge fund, I was always amazed how low the competition was. I had 7,000 hedge funds overall, incorporated against us in general, but there were only like 3 or 4 doing the same thing I was doing, and so 6,990 something were not, which was really weird. It's like, why use the word hedge if you're not hedging? That's a real question mark. It seems really bad that hedge funds use the word hedge when they're not, and we've seen that too. What was it? I think it was the Calamity Remember, I emphasized that in webinars in February and March of 2020, that all these hedge funds were losing money. It's like, how can you be hedging and losing billions? You're not hedging then. It's obvious you're not hedging. All you're doing is using the word, but you're not using the tool. And so, here we try to talk about the reality of trading, the physical events of the times. I see this one commercial all the time. They say, trade like a floor trader. It's like there are no more floors anymore. You can't get a job on a floor. They don't exist. So how can you trade like a floor trader? They want to make you believe, trading from your computer, that you are trading like a floor trader, and you're not. All you're doing is you have the same access of what floor traders had executionally. Okay, and I'm going to say that again, because it's like, what is he saying? By us trading in front of our computers, we have the same access to execute orders like the floor traders did at their fingertips. Problem is that floor traders were reactive traders. We, as off-floor traders on our computers and our phones, are proactive traders, not reactive. Okay? And so what happened was floor traders were reactive to the execution coming to the floor. People were selling the bid, people were taking the offer. Here, on electronic trading, off-floor, you have to find, you don't have people knocking at your door saying, I think I'll buy some Deutschmarks from you. Or not Deutschmarks, Euros against. Or I'll buy some Swiss. Does the mailman knock on your door and say, hey, I'd like to buy some Swiss. You want to sell me some Swiss? No. And that's what floor traders did. They were reactive to orders coming to the floor. Now we live in a proactive world where you've got to find a decision how and why you're bidding, why and how you're offering. Whereas on the floor, they came at you. Those orders came down from the public to the floor, and they said, hey, we want to sell this. What price can I get? And you go, oh, okay, it's trading at 50, I'll bid 49. And that's the disingenuousness of our era now. There are no floors. You can't be reactive. You're only a proactive trader now. I'm a proactive trader. You're a proactive trader. She's a proactive trader. They are proactive traders. There are no floor traders. Matter of fact, I've even said in the webinars, we've lost 75 to 90% of the trading desks. They're gone now. So not only were they acting like floor traders at the time because they had customers coming to them and saying, I want to buy this or I want to sell this, and then the desk upstairs would go, oh, okay, yeah, it's see, the market's at 50. I'll sell it to you for 51. And that's how they worked. So don't bite onto those crazy ads that say, we're going to teach you how to be a floor trader, because there are no floors. Tell them that you want them to hire you for a floor job first. All right, so that's me and my attitude about this whole thing. So we are reactive refugees. We are now proactive traders. That's what it is. We are reactive refugees. All us old floor traders are just refugees from the floors, and we are all now being proactive. That's why, Dukascopy has a webinar in a little while by, it could be, let's see who is it. Let me just double check. I was looking at it this morning again. Was it, where's it at? It was advertised. Fibonacci by I'm trying to find him. It's I think it's a fellow down in Argentina, not Argentina, Brazil. We talk once in a while, and so to be to be a good trader today, you need to understand like Fibonacci and moving averages, and and you tune into Doc's work, and we have a strategy on J4X. You have to be proactive, and that's how the whole world functions now. Proactive, not reactive. Okay? All right, we're done there. Let's see. Passion, that's it. I wanted to say passion 5 times. And yeah, passion is doing that. Matter of fact, last week, didn't he do He did one. I was talking about it. He was doing one on cryptos. You know, and how are traders going to learn about it if you don't watch webinars and so forth on this stuff? But don't let anybody make you think you're going to be a floor trader, because those things are extinct. They went with the dodo bird. They went with the woolly mammoth. They're all gone now. They don't exist anymore. Okay. All right. So you can see there the euro, that pair's trade obviously moving down too, but showing a little life on the weekly signal here at Doc's work. So we'll see. This could be more, like I said, this is all, that's confirming that this is all panic from the China situation. And that's what we've been warning you for a couple weeks now, that there's a problem. You know, there's a problem there. And if they're allegedly the second largest economy in the world, and the second largest economy in the world goes belly up, uh-oh. That's not a good thing for anybody, okay? Not good for anybody. All right, let's take a look at cable now. And cable is the Commonwealth, so you would assume that there'd be a little bit more strength in the Commonwealth sector. At least I would think so. You know, but no, you can see it's rolling over here. You can see on J4X the white line has pierced and has been down for a while. We over here on our work, did I put it in there? No, let's put it in there, right there. Red dots, see the cute little red dots right there? Let's make them bigger, biggerish, so you can see them betterish. You see the red dots, just like the red hinky ashies on the J4X. If I can figure out the right mouse. There it is right there. And then make them larger. There we go. Ooh, what's that spinning away? There we are. And they're a little bit bigger there. You can see they've been moving down. You can see we've been in a daily sell from here. We were in a weekly sell from here, but it hasn't really done much. But again, it's right at the beginning of this China collapse, you know. And so what you're seeing here is, you can see the weekly. It's such an extreme move this week because of the because it's, you know, the rubber's meeting the road. In other words, it's actually physically happening, and maybe the world is actually starting to pay attention now after 2 weeks of Doc whining about it. You can see that the first initial situation with our weekly is it's bouncing up from it. So we'll see how that ends by the end of the week. If it's all down here, this will start to roll over, and the weekly will disappear. And that's how that works. And so Passion is doing, he does his Fibonacci stuff, and so you should tune in, see what's going on with that. Fibonacci is a good tool. We have a couple charts here that, matter of fact, this chart has Fibonacci on it because someone asked us about it. Now that I'm saying that, it's not self-serving. I'm not self-serving. And matter of fact, what we can do is we can make the lines a little bit thicker, so you can actually appreciate them a little bit more. If I can figure out how to do that. What the hell's going on there? Oh, I see. When they're dots, you can't make them thicker sometimes. So let's do that. We'll go like that, and we'll go like that. Make it a line, and you know, you'll be able to see it a little bit better. And this is the Fibonacci sequence, and it's an important tool. My math incorporates it in those squiggly lines. They deal with it already, because my math is a prelude to Fibonacci. In other words, when I say that, my math probably evolved before Fibonacci evolved. Okay, it was a prelude. It was before Fibonacci. And then Fibonacci slowly established itself over whatever reasoning behind it. In other words, physiologically. You know, the spiral in the galaxy, the spiral in the trees, you know, the spiral or the rings in a tree cut sideways, looking at the rings as it grows, all follow a Fibonacci sequence. Squares versus rectangles follow a Fibonacci sequence. All this is all a natural event that occurs inside our world. And our math is a collector of data, and it's a predictor of it pre-Fibonacci. So our work is a function of Fibonacci, but since I don't publish it, there's no, and in a mathematical journal, there's no reason to know anything about it. It's pretty much the way it goes. So that's how us proactive traders have to function. We have to function. What is going on there? Get back up there. Let's see if we can fix this chart and get back to the cable. There it is. I was trying to make it a little bit bigger so you can see it. And so there it is right there. Matter of fact, it has dropped and is going back to the starting line of the sequence. And you can see it bounced off of the 50. Let me put the 50 percentile up there as a solid line too. There it is. So there's the 50, and if we make the time, let's see, that's the Bollinger Band right there. Remember, I put that up there for somebody who was interested in looking at Bollinger Bands. So we'll make that thinner like that. There we go. So the red and the blue. Let's change that. We'll change that to another color, so it stands out like purple or something like that. And that's the Bollinger Bands. And then what you do is what we were doing is, okay, let me see, okay, there we go. And then what we were doing is we were looking at my time manifolds and how my time manifold is ahead of the Bollinger Band. In other words, it gives you a prediction ahead of that. Same way as my work gives you a prediction ahead of the Fibonacci. And hence the reason I don't do a Fibonacci webinar is I don't want to give up my secrets. So I'll talk about the results and I'll show you the work live, but I will not give you my secrets because I make a heck of a lot of money from it. So there's a good reason not to. Anyhow, that is where we are when it comes to the difference between proactive and reactive. We're all proactive traders. I'm a proactive trader. You're a proactive trader. He's a proactive trader. She's a proactive trader. They're proactive traders. We have to make a decision. What makes us bid? What makes us offer? Whereas reactive traders on the floor, the order is coming at them, or on a trading desk, it's coming at them. Someone wants to sell something, and they're going to lower their bid or raise their offer to sell it a little bit better or buy it a little bit cheaper. That's what that's all about. And if those advertisements can show you and me how we can do that in a proactive level, that I'll be interested in hearing about. But I don't want to hear about stories when I was on a floor and they don't exist anymore to have that philosophy anymore. It doesn't make any sense to me. All right. So there it is. There's the cable. You can see the Fibonacci's. You can see overall. You can see the J4X. It's heading south. And I'm a little disappointed because, I always think the Commonwealth should have more credibility. If they can give Communist China all this love, why can't they give some of that love to the Commonwealth as far as I'm concerned? So that's where my head is at. All right. Now, let's drift over to the Turkish lira. Unless anybody wants to see anything. Remember, traders, I don't have to ramble through my list. We can get involved, like the way Oz Rome got involved in whatever we talked about on Friday. We got deeper into it. We discussed it. Boom, done. Had a fun time. I loved it. I love talking about whatever it was I was talking about. I love answering questions. I love looking at markets. I love it. I love it. That is reactive. That's reactive. That's what I miss. I miss those days of the reaction. Now here you go. You can see here, let's get it up there, the Turkish lira right there. You see it's still moving up. We're at a daily buy for 3 days now. And you can see we went into the weekly buy last week and doing a little bounce over because of that, but it's still above. So let's remove that. Let's put the line in there. And even the euro against the Turkish lira jumped into it too. So that's shows you that the dollar obviously is just being very, very strong at the moment. So we'll drift down to that. Oh, let's see what it looks like on Turkish on J4X. Right there. There you go. And as you can see, there it is. You can see all that green. You see the white line through. You know, good little system here on the J4X. Matter of fact, I think Oz asked about that, right? Metals? Sure. Let's check out the metals. Where are we at? And then we'll go back to the Euro Turkish lira afterwards. All right, so let's see. Let's go to the. Let's start off with gold. I saw it was sideways. Sideways up. Okay, that's not too bad. And it's threatening the weekly after going into the daily. Both are threatening. No, the daily's not threatening, but the weekly is. That's what it is. Okay, and then let's switch you over to that right now. Now there you go. There's gold. We went into the weekly sell last week. You know, we've been in a daily sell from that day right there, and you can see we're getting a volatility signal. That's a little panic. I guess that's the little panic of the China, the People's Bank of China falling apart, and the country falling apart economically. So what else can we say about that? Not much. We can. And since you threw it out there the way you did, Douglas, what we will do now is we will take a peek at silver. Since you didn't say gold, you said metals. So we will provide. Seek and you shall find. Ask and you shall receive. There you go. Now that's trying to perk up too. That's the silver this morning. Matter of fact, let's give it a Control R and see what happens there. If it changes much. I don't think it does. No. And so you can see here, still in a daily sell for a couple of days. In a weekly, you can see on the fact check spreadsheet, that's line 8 or 9, something like that. 7. Which line is that? 9. We're 19 weeks now in a weekly sell on that product. 19 weeks. It just refuses, and this is the 3rd day in a daily sell. It just refuses to. I mean, we thought last week, I thought, oh my God, we're getting there. And I guess money was rushing in at the metals because they knew that China was falling apart. But thank Mr. and Mrs. QE, they refused to let this stuff grow. That's for sure. They're truly reactive and proactive. They're both. Boy, are they aggressive. And they just will not let the metals get any life into them. And since you said metals, I'll use that as a carte blanche to go take a look at platinum. Where are you, platinum? Right there. October platinum. You can see October platinum trying to come back from its lows today, right there. Been in a weekly sell since the cows came home. It's been a while now. 20 weeks, line 7. You can see that right there. Line 7, we have been 20 weeks now in a sell right there in platinum. Yowzer. They just won't let these metals do anything. You know, they want you to buy bonds. They want you to take your life savings and buy bonds. Buy bonds and buy them again because they're going to be the put for it. And as long as there's a quantitative easing, there are going to be free puts out there. And since nobody is healthier than the U.S., there's nowhere else to go on the planet until someone other. You know, that's why they were. That's probably why the socialists in this country were cheering. They wanted to. They like to get rid of capitalism, and they want to go to the socialism. They think that's better economically, but it is not. But they think it is. So that's why they cheer on China when China has labor camps and no freedom, and you know, and the end result is they think that's wonderful. Ugh, what a messed up world that is. Talk about Douglas. Talk about was it? How'd you phrase it right from the beginning? Another 2008 scenario. The political spectrum is the 2008 scenario too. They're a bunch of cuckoo birds. All right, that's why they had to get rid of Mr. Trump. He was trying to clean that mess up. They can't have that. How do you think Mrs. Pelosi became worth $200 million in a job that pays $175,000 a year? Yeah, be proactive on that one. All right, from there, I guess that's the metals. I hope that satisfied your look. Something is up. What do you mean something is up? I mean, you mean the, what do you mean by something is up? You mean in the metals complex? You would think so, wouldn't you? Yeah, I mean, really, you would think that people noticed they were smashing Bitcoin this morning. I was a little surprised about that. I mean, I hate it when, and you know that's not the owners of it. if it's the owners, it's because they're desperate for money. Let me go show you what Bitcoin looks like this morning. Oh yeah, right there. There's September. Look at that smackadoodle down in there. Let's give it a refresh. But yeah, I mean, I guess what's up is that in the end result is that China's falling apart. There's a lot of money committed to China, so that's going to have a lot of people nervous. Oh, something is up. I saw a picture of Pelosi and Soros. Yeah, well, they're all benefiting from things, you know. As I take another sip of tea. Yeah. Well, you know, we're moving down. What is it, the Dow? I showed you the Dow, right? Let's take a look at the Dow. Here, let's do this. Where's the Dow at? There's the Dow right there. I mean, we are at the lows. Let's show you what the intraday is looking like at the moment, which shows how much they're up or down. And if I can grab the right mouse. And I want to make this a little bit smaller so it doesn't explode on me like it did last time on two screens across. Okay. So there it is right there. Now here is the Dow on a 1 Tesla, as I like to call it. So what it did is it came down. Let's go to the Swiss and the Frankfurt and the London Opens in Europe, and the Milan Opens and all that. The Dow Jones Industrial Average was trading between 34,050 and 34,000 up in that area, and then now it's trading at 38. Got down to close to is it down? It's past that, isn't it? Yeah. So it's now trading at went down to almost 33,750. So that's at 250. It's like 300 points down. Overall, you can see right there from Friday's close, it's down 653 points. It's down a little less than 2%. So the markets are feeling, we don't, and what we really don't know yet, we have to find out who is going to get hurt from the Evergrande situation in China. So, we don't know if, like Citibank or, we just don't know who has a lot of the stocks and the bonds and so forth. We don't, because everybody is following the quantitative easing thing. In other words, there's a free put out there to protect everybody. The Federal Reserve will buy no matter what and lower rates even more, and we'll lend these institutions money for free. So, in other words, if yields are like 2% or 3%, when the Federal Reserve offers you money for free, like, is anybody knocking on your door and saying, "Can I lend you $2 billion for free just for a few months, would you mind that?" And you go, now let me think. Is this a trick question? Do I want to take $2 billion with no interest for a few months? Is that a true or false question, or is that a yes or no? And so what they do is they go to the institute, and they even do it to Citadel. Citadel, the hedge fund, one of the top hedge funds, gets that money. They give them money for free so that they can go and invest in the marketplace and hold it up. That's how the Federal Reserve in the United States, and I'm sure that's how the ECB does it in Europe, they lend money to funds and banks and institutions for free overnight, and then they have to do something with it. And how hard is it really to beat zero? It isn't. Especially in a market that seems to want to go up more than down. We need a better capitalism. No, we don't. We need better politics. Capitalism works just fine. We need more of it. That's the problem. There is no. The socialists in our governments keep on adding taxes and adding regulations, and they keep on shrinking capitalism. So we don't need a better capitalism. We need a better politics. More balance will increase market cap exponentially, create more wealth and freedom for more people. Exactly. That's what Trump was doing. Trump did that. That's exactly right, Oz. You hit it right on the hammer there, the nail. You hit that nail right, smack dab, one swing, boom, went all the way in. You didn't even have to swing it a second time. you done the big muscly thing. That's cool. So no, we don't need a better capitalism. We need a better political system to stop these clowns from interfering. Less taxes, less government makes capitalism better. More taxes, more government makes capitalism worse. That's what it all comes down to. Nothing. It's not that complicated. Alrighty. So where are we at? That's that. Let's check out since we're here. No, you know what I'll do? I'll go back to the Turkish lira unless someone wants to look at it. Just let me know. Because if you want to look at it, I will gladly go back to whatever you want to see. Trickle down to narrow-sighted. Narrow-sighted. We can make it rain. Right. Well, trickles down is fine. In other words, slow, organized. We have a saying in the farmlands here. On our farm, I emphasize it to my children when they were like 2 years old, 3 years old, 5 years old, 10 years old. When I had them on tractors when they were, 8 or 9 years old, 10 years old. I think I have a picture out there somewhere. Let me see if I do. Basically, go slow, get in trouble slow. Go fast, get in trouble fast. And when you get in trouble fast, it's hard to get out of it. But if you're going slow, you get a chance to get out of that trouble. But if you're going fast, you get stuck right in it. Douglas says dollar index. So let's check out the dollar index. Here is the ETF that's trading live at the moment. Right there. You see it's at the highs of the day right now in a pre-market. We're in a weekly buy from Friday. We went into a buy there. We've been in a daily buy since back in here, since the 7th, since this low. And it was fun because this, let me just tighten this up a little bit. The dollar was being very firm of it all. Remember, I went into the weekly buy here back in 6/11, what is that, June 11th, right? And stayed in the weekly buy all the way to, where was it, last week, right there. Went into the weekly sell 2 weeks ago. Let me put that line in there. So I went into the weekly sell there, and now it's flirting again. Oh no, on Friday it closed in a weekly buy, and we were in a daily buy. So the dollar is doing pretty well. Let's see what the lines look like and all. And Dukascopy has it too, so we'll check it out on J4X. Now look at that. Because it spiked so much, it's driving the weekly a little bit down at the moment. We'll see how that goes for the rest of the week there. So you just be a little cautious, but nothing major. And as long as we're in a daily buy, there's firmness there, and you know that the trend is your friend. So it's gone from 24.80 all the way up to 25.05, which is a decent move. What's that? 2% move. And so then let's go over to J4X and look at the dollar index for you. And then Oz wants to see GBP JPY. Let's check that out. That's one of my favorites now too. I like watching that. Where's that? Right there. They have the dollar index, the actual future contract, or the cash at least. Let's see if we can find it. Right there. So you can see there, on J4X, white line that pierced through on the daily. It did it again here after a little hesitation, and we've got green hinky ashes going north on that. Now, let's go check out GBP JPY. And Douglas, if you want us to look a little bit closer at the dollar, we can. Let me just do this. Yeah, so there's the weekly. We're above the time manifold real quick there. See that? And as I said on the weekly, I wouldn't worry about that. It's breaking down because of the big spike. This data is going to be a little corrupted because it's a pre-market. That'll clean up, and chances are that weekly will be back up in another 15 minutes. It may not be underneath anymore because they'll put the clean market in there. Because right now that's a pre-market, so it's carrying Friday data and today's data together on the same bar. All right, now we go over to GBP JPY. Right there. And let me just throw another recommendation out there for Passion. Passion's doing a good job about talking about some of these technical tools. You need that to be a good trader. You need to be proactive. There is no such a thing as reactive anymore. Those days are gone. They should stop pretending. And that's why Passion's doing a good service by teaching different classes like this, like he did with the cryptos. Now he's doing with the Fibonacci's, and he's done Fibonacci's a lot. He's been doing a lot of Fibonacci for years on Dukascopy. And you can see here, what is this? This is the GBP JPY. So you can see it's breaking through on the weekly because of the extreme here on Monday. We'll see how that goes. That should start to pair off by the end of the day going into tomorrow. Especially tomorrow and Tuesday, Wednesday, that'll start to clean up. We've been in a daily sell since there. So you don't have to be too worried about that little bump at the moment, just because of the length and size of the sell-off today in it. And this is a really good tool. Look at that. You know, it goes in a weekly sell here, it goes in a daily, nice win. You know, it throws itself in a buy. You're not short anymore, but you're still in a bear mode because it's in a weekly sell. And then what happens is that it goes into a daily sell. Barely goes anywhere on that one. It makes money, but very little. Gives you a warning of some strength, and then here we are. We go into the sell again there, and we're in a weekly sell. So you've pretty much caught that whole ride again. Another winner chicken dinner. How's that? Is A-okay? All right, now let's see. What do we got here? From there, where are we going to go? Oh, I wanted to look at the Euro Turkish Lira. I want to finish that off. But if anybody wants to see anything, fire it out. We'll jump right to it. Because I like to, you seek and you shall find. Ask and it will be delivered. There it is right there, Turkish Lira against the Euro. And you can see that strength that's in there. And let's check out the Chicago quant side of that. Let's see, right there. And right there. And I think it closed into the weekly yet. See, it closed in that weekly also. We can move that over at the moment like that. I don't think it's really going to have much. I don't think it's going to have much of an effect. I think that, like I said, I think within the next day or two that'll be back up again. If this market stays here, if this product stays here, that's what will happen. And so we went into the daily buy there. Let's put that in. And let's put that in like that, right there. Let's try to save this thing. Sometimes I forget to save it, and then we have to redo that again. And it closed in the weekly buy last Friday. And that was interesting. This is definitely the better of the two Turkish liras to trade. The Euro Turkish Lira is definitely the better one. Cool. All right, now where are we at? Okay, so we've done that. Let's look at Canada. They got their politics going on right now. You can see it's playing with that top end of the range again. They have elections going on, so that's what that's all about. What else we got going on here? I think we moved our dots down so you could see the bar chart for some reason better. I'm not sure why, but and you can see we've been stuck in a weekly buy in this product for a while now. It doesn't seem to want to go away. You know, ever since the bottom end of the channel, they went into a buy, which is really nice. I mean, I'm happy about it. The idea that it would finally get into I mean, look how long it went on for a couple weeks before we got the weekly buy. We were still in a weekly sell, as you can see, right there. We went into the weekly sell here, and then it fell down and banged on that channel for so long. And then we finally, you know, we went into the daily buy there, and by the beginning of the next week, or the end of the following week, that was probably like a Friday, and that was a 4th, 5th. No, okay, so there was the end of the week, and then the following week it closed in a weekly buy, and it's been, you know, just that whole move going on there. We usually interpret that as weakness in gold. We already seen the metals complex; it's weak. We're a little sad about that. Because it's a real product, and I really wish quantitative easing hadn't damaged the poor thing, because that's really what's going on. Is quantitative easing has beat up the metals complex. I mean, I say this many a time to many a trader, and I say it here all the time. If you would have asked me in 2008, if you would have told me in 2008 what a future scenario would be, a future scenario, okay? And then you said, okay, now Doc, now that's the future scenario. Where do you think gold is trading and let's say you described this scenario we're living in now. I would have said, well, you know, gold would be between like 3,000 and 5,000. It may have spiked to 10, but then it, you know, was so ridiculous that they brought it back down into the 5s. And depending on how things are, I would say that gold should be around 5,000 an ounce. That would make sense to me. That's in 2007, being told about a scenario of what 2008, 9, 10, 11, 12, all the way up to 2021 is. I would have thought gold would have been trading there, but no. The Federal Reserve has chosen to be an active participant. They are the buyer of last resort. They are the reactive trader. They are the floor. So that's why we see the metals complex and so forth not really making a lot of sense. That's very sad, you know. What do they call that? False hope? I'm going to take a sip of the tea again. There we go. So now, that's CAD. From CAD, what we do normally is we go to the metals complex. And we already know it's heading down. Then we also, at the same time, look at the energy complex. Because, you know, Canada is a large producer of oil. You know, it's a large producer of gold and silver, you know, that type of thing. And so you can see there's crude, and it is selling down. Now, I've been reading stories over the weekend. There have been talk about there's a confusion, you know, because Mr. Biden and his socialists are trying to remove carbon-based fuels. God, you can't find any of this in a physics book anywhere, so I don't know why anything has credibility. Like clean energy. There is no clean energy in a physics book. There is no renewable energy in a physics book. There is wind. There's, you know, river, you know, turbine stuff. I mean, that's there, but it's not renewable. Energy cannot be renewed. You know, what's it? Newton's law. Energy cannot be created or destroyed. You know, I mean, is Newton now gone? You know, I mean, you know, it doesn't equals MC square work anymore? What? What's going on there? Where did they come up with these crazy ideas? And why does anybody talk about them so loud? You can't find any of this in physics. They don't exist. Same thing with the weather. None of it. Matter of fact, does everybody know that the ozone is having even more problems now? We have more holes in the ozone. And, you know, everybody gave up the CFCs and their CPCs and cigarettes and hairspray and air conditioning and gave up all those things, and the ozone layer is getting worse. So notice they don't talk about that too much. They keep their mouth shut. You know, some of the strangest stuff goes on. It's not in physics. It's not in science. It's in politics. Right up there, Oz. It's the politics. We need to get rid of politicians. Everybody should have to. You know how like they have the draft. They should have a draft for politics. Get rid of the elections. Just you get drafted, and you got to do 2 years or 4 years, and then you're done. You know what will happen? No one will pass any stupid laws because they'll be too terrified to have to live underneath them in 2 or 4 years. But when you have politicians that have been there 30, 40, and 50 years, they don't really care. As far as they know, is that they can pass a stupid law and you have to live under it, and they don't. Like there's no mask law now for, or take a needle, you know, take the serum law for people working government, you know, not the government, the in the politics, like the House and the Senate. You know, only people who have to do these things are people that are being told to do them, and they're just messing with everybody's heads. So anyway, there we are. That's that part of my head. So you can see here crude is trying to go into a daily sell. You can see it's underneath at the moment, but you see the weekly looks even stronger than ever because of that extreme move. Let's push the, where's it at? Let's put it on J4X and see what it looks like there. I should have a draft. Okay, we need 50 senators. Are you willing to put your name in to be a senator for 6 years? Sure. You're going to pay me $200,000 a year, give me all kinds of perks, and then you're going to tell me I have to now live under everything I decided. Ooh, I'll just take the money for 6 years easy. And then I'm not gonna pass any stupid laws because I'd have to live underneath them. But if you think you're going to be there the rest of your life, you'll do all kinds of great stupid laws. Let's see, who just dinged me? Okay. All right, and let's go look at crude oil. Right, where are you? There you are. Light sweet crude. So I don't think crude oil will get too crazy. I know China was buying a lot of it, so maybe it's perked up. Oh no, you know what I heard too? We talked about it in the webinar about a week and a half ago. China was talking about selling some of their reserves because they have a large surplus of oil. Oh, you like that, Robin? Yeah, it's one of my crazy ideas I just came up with. Make a draft. How would you like to be a congressman next year, Robin, for one of your districts in Illinois? You know, so you'd be a congressman for 4 years. And how many stupid laws will you pass when you know that you got to live underneath them the rest of your life? Not many. Definitely not many. Matter of fact, maybe we'll cut the pay too. Who needs all that money being spent as a congressman or congresswoman or a senator? You know, how big will bills be? Instead of 1,000 pages, they'll be like 3 pages long. You'll know what you're passing now, because if you don't have, 10 staff members reading it, and you have to read it, will you really pass that much that's stupid? Now that you have to read it, and you got to live underneath it. You won't pass too many stupid taxes, will you? Oh yeah, I think I'm going to tax myself to 80%. Sure you will. I don't think so. All right, so there's the crude. You can see it's feeling the pressure, just like Chicago Quan is right there. So, where are we at this point? I guess we're at the end of the road. We will be, I guess we'll be back again tomorrow, same time, same channel. Doc will have the same attitude about it all, telling you the truth. We'll give you the truth. Doc was here 3 weeks ago talking to you about Evergrande, and here it is, caving in on the world now. So, that's what we do here. We tell you what we see, real numbers, not pretend numbers. You can look at a Doc webinar 3 years ago and find real data that means real things. And you can see that it played out pretty much exactly the way we talked about it here. We might have something wrong, we might have something why it was this, but in the end result it usually plays out the way we thought, because we're reading the way it plays. It's kind of like golf, you play that ball where it lies. Not many mulligans around here. All right, this is Doc from North America. We will catch you on the flip side Tuesday. Happy trails to you until we meet again, which will be tomorrow. Happy trails to you, to all our trading friends. Ta-ta for now, traders.